What was the one mindset shift that made that scale possible?
I try to be transparent as much as possible. Like I always have the same answer for everyone.
You have grown iClub to over $70 million.
I remember I've been chat with Dmitro Dubilet, with Mikhail Rogalsky.
When you're responsible for millions that aren't yours, do you actually sleep at night? Most people think that venture capital is about investments, startups, and the big money. But honestly, it's mostly about making hard decisions when there is no certainty at all. You're watching Trustee Talks, a podcast about finance, businesses, and technology. Today's guest has seen businesses from every possible angle. Inside global corporations, inside startups at different stages of growth, as an investor who decides where the money actually goes. Yuri Raanukha is a managing partner at iClub Global. He has over 15 years of experience in venture capital and Fintech. He worked with L'Oreal in the United States, Adidas in North America, Walmart, and launched Uber's payments infrastructure in Ukraine. Yuri, great to have you here on Trustee Talks.
Thank you so much. It's always a pleasure to have this kind of conversation, especially right now, because I strongly believe that if you are sharing knowledge, that's the best approach to act if you have something to tell.
Start without titles or fancy labels. Very simple. What do you actually do today?
In simple, I'm connecting people that have the money with people who are creating the future. And it's very complex because in 95% my strategy is to say no, because again, you imagine you can lose your own money, but if you lose money of your own investor, you also losing the trust. So my assumption in what I'm doing right now is trying to find the approach that can create value and, of course, earn money for my investors.
Mm-hmm. So you have worked inside corporations with startups and as an investor. From your experience, where is the hardest to make decisions? When you're running a big company, building a startup from zero, or investing other people's money?
If you're in the corporate, so you have at least 50 layers on top to just tell that it was not you. And the mistake is not feel that it's a pressure that you have. But if we are talking about investing with a network of trusted relations with investors, that's completely different angle. And if you are not clearly understand a topic or clearly understand the value or company, that can easily break you off and get your ass to the stress level. Because again, the hardest part is not just like distribute money, but rather to earn money. In our case with iClub, we already have 11 exits that create already over than 15 millions in returns. And that's basically, in my opinion, a different layer of pressure, because if we compare the same strategy in corporate world and corporation, you basically have completely different rules to play and still have an excuse that you can choose if something went wrong.
Psychologically, how does that feel when you're responsible for millions that aren't yours? Do you actually sleep at night?
That's a great question. So I'm fighting, for every hour of my sleep every day, because again, I'm trying to be such active in any way. But in our case, we have trusted partners as well. We not just single us with iClub to invest. We have TA Ventures that start to invest a bit earlier than we are. It's a VC fund that invests only on early stage, it's seed or pre-seed stage up to Series A. But iClub is step in when the companies already create the value, revenue, and the companies already can achieve early growth or growth stage. So it's Series E or Series B stage. So that's precisely give me a bit confidence position in terms of what exactly I can show to the investors and how exactly I can prove that this statistic is not just random numbers in the deck. It's something really appropriate that we can facilitate from the legacy perspective.
Before we go further, we really to talk about the iClub.
Yeah.
Many people, venture capital still feels like someone closed, elite circles, private clubs, money not for everyone, So let's start very simple. What is iClub today and how does it actually work?
Beforehand, 4 or 5 years ago, iClub was sort of niche product that was originally created around the fund TA Ventures that allows like investors with net worth 100, 500K to start to invest in venture capital. And that was exactly reality when we have this kind of narrative where venture capital was not for everyone. And then we understood that a lot of things with, of course, era of AI can be automated. So we create a whole logic between our users and it deals itself as a product layer. So right now it is an app, iClub app, that already have inside completely automated onboarding, completely KYC, IML screening automated, legal part also we automate completely. And pieces by pieces, we create the layer that can scale easily. So we leverage the ticket size right now. It's from 5K to invest in one company. And that's bring the whole idea of democratization, because right now, so our audience, not just wealthy people that already know how to earn money on a biggest scale. Right now, our main audience is engineers, like lawyers, the C-level of the companies. They are actively using our app, and they already have proven portfolio with us because, again, we are not just randomly sharing some companies with them, rather we are facilitating with them the layer of understanding topic, and of course, sharing with them the whole knowledge about the company that we eventually met, not just right now, but through the fund, it could be several years before.
You have grown iClub to over $70 million and nearly 100 investments. So looking back, what was the one mindset shift that made that scale possible?
If we're talking about fundraising part, maybe it will be interesting for those who are building their own company. So right now, on average, we are doing from 1 to 2 million per company investing. And if we're talking about like days before we built the product, it was on average like 300, 500K per deal. So that means that the effort was exactly the same from the team perspective, from the how much time we are spending with founders, with all the preparation stuff, and the result is different because, again, like from the perspective what we are right now achieving, we automate a lot that was done from the monkey job perspective, that people are not doing like this anymore. We are mostly of the time like focusing on things that's related to the important questions that we can take from the audience and facilitate these answers from the founders in a way that is clear and understood for our audience better. So the goal here is not just like, sale, but rather to build the bridge of understanding about the topic, about the company, about the co-investors, and about the strategy when exactly will be the point of return of investments.
That's an idea in venture capital that closed clubs are losing to open communities. What does that really mean in practice?
About a story about the closed clubs. So when I studied in the US, I was studying in Berkeley University. I seen a lot. There is even completely interesting place, like calling Sand Hill Road. It's basically a road that has a lot of VC names and on the buildings. So they are every day coming to the same place. There is different firms, but it's still like, as a district, completely full of the money from the venture capital industry. And this exactly what I feel back then, like it was 15 years ago, that this industry is completely closed because they are playing in the same sports clubs. They are also going with the same events. They also like connecting through the same deals and through the same network. And my question was the simple, like, how I can get there where these guys are not ready to step in. So that's how we start to evolve this idea, especially with iClub. When we understood that these large names VC firm, they are completely out of understanding of some specific topic, especially like industry that's right now rapidly growing. And sometimes, like, for example, my audience. Like, for example, I will have one member from Estonia. He is a cybersecurity engineer. So he asking always great questions about his specific domicile, like industry that he knows like very, very well. So he can ask better even question than, for example, some venture capital big firms. And it's also like very pleasant like to have these kind of customers that know this topic like very close. And that's how this paradigm start to shift, because like again, I not believe in the folks that just seen spreadsheets and can decide whether or not it's a good company or this like idea is a complete bullshit. So my opinion that if you want to invest, first of all, you need to understand how to build something yourself. And that's completely different side of the angle, because like while you have an entrepreneurial or at least like some managerial experience, it open up a lot of ways to understand the topic in a broader way. And again, like if we're talking about the venture capital firms right now, they are also trying to change. But again, like their speed of the changes is not there. Like I see that disruptions coming not just from these large institutional investors, but rather from the angel investors that know how to exactly select proper companies and exactly proper founders that can deliver value on top of what exactly we're calling return of investment.
Let's do a quick blitz to warm up.
Yeah.
I will say a statement and you answer quickly, true or false or myth. The idea is the most important thing for a startup.
I think it's myth, because execution is matter. If you ask me about like how many ideas you can track, or for example, I can hear per week, it can be 100. But again, like I most value the execution part, like, how team can progress on the topic and how their founders can deliver something.
Fintech is already an overcrowded market.
That's completely bullshit, because I think banking has a lot of room for improvement.
Plus.
And of course, payment still sucks. There is no easygoing solution. And if we're talking about like examples like B2B, there is completely still open ocean to explore.
Infrastructure is boring for investors.
It's probably true for dumb investors, because again, if we're talking about infrastructure layer, the strategies, it's a bit broader than just a single iteration. But again, if we're talking about smart investors, rather it's focused on things that you can build on top of infrastructure, and then understand how you can scale the things on a layer that it's allowed with infrastructure, of course.
Payments are a commodity and no innovation left there.
Totally myth, because plenty of issues still left. If we're talking about the cross-border payments or B2B payments, there is such many places to be improved. And of course, that's the biggest question. Where will have this innovation coming from?
Crypto and fintech are competitors.
If we're talking about stable coins, they are like bread and butter for fintech to grow.
They must work together.
Yeah.
Corporations are too slow for innovation.
Yeah, that's true. And the reason is simple. Corporation has something to lose. And of course, in their cases, you need to be properly ready for some changes that you decide.
A global product is always better than a local one.
I think it's myth, because you can start local and then scale on a global size. And we'll talk probably today about this. But that's a very interesting topic.
Money matters more than timing.
I think that timing is crucial, because I saw a lot of examples when even greatest idea was launched in the not proper time. And of course, that's ruined everything. Again, it's also could be opposite then. For example, not the best idea that launched in a great time was completely successful in terms of what exactly they are seeing from the reality of expectations.
We've killed a few popular myths today.
Yeah.
Now let's talk about how things actually work on the market. Speaking honestly from your experience, of course. Today, do investors mostly look for a fast growth or for businesses that already know how to make a stable money?
It's always question about fear and greed. So you have on one side fear as investor, and on the other side is greed. So like comparing to the reality that we have in 2021, there was a side of the greed definitely, because everyone tried to invest without even understanding of topic. Everything is growing really rapidly. We know this like market of the crypto was booming crazy. So everything was like such a polite way for investors. And right now we are seeing that the reality is more about the fear. So investors try to tidy it up and try to tie their assets to idea that they need to see the revenue, they need to see the traction, they need to understand how exactly that will be a topic that can return their investments. And while we are seeing these shifts, it will be never stable. So probably next phase will be also about the greed, but we will see it's always circle that going further.
Investors' behavior changed, right?
Yeah. So it's always and especially with markets and industry that's changed this perspective, because that AI few years ago was all about the greed, so everyone wants to be a part of that. Right now, investors moving more wisely. They want to ask this project or founders how exactly they will gain revenue, how exactly they bring the value of consumers to the product, and all of that's come from the perspective already, the fear that the market it's a bubble. So that it's always circle that you need to understand where exactly your reality is, and then iterate with investors.
A few words about crypto for a moment. How do investors see crypto today? As a standalone industry or as a part of the broader financial infrastructure?
What I'm seeing that the industry is still split. One part of this investor, they always mention that it's a Ponzi, it's a libertarian. Everyone is want to chase the idea that the crypto is not the actual thing. On another side, you have proven standards that stable coins already doing 100 billions even transaction every year, and that's a continuously growing trend. And in regions like Asia, US, Europe, Latam, they haven't seen already growth of usage up to 50% year over year. So that's mean that crypto is reality that's already faced the execution part, and the applicable scenario of stable coin is definitely someone that's can easily understand, and customers really value the crypto about that. And we are exactly in this side as well, because we are running this conversation with you. So I think that's fair enough. So in broader thing also, if we're talking about crypto as a topic, I think that's crypto as a layer with a completely trusted scenario between A to B scenario to sending money to whom, and all this facilitation with the smart contracts, that's bring usability case of efficiency. And in my opinion, we will face the reality when large institutional scenarios like SWIFT or SEPA will be stressed out completely with understanding that the stable coins and crypto already took their breath.
Which fintech or crypto models do investors usually reject almost immediately?
If we're talking about some meme coins right now, because it's of course it's all about greed. And as I mentioned before, we are right now at the fear side of the investors' behavior. So everyone tries to understand better how exactly they are investing and where exactly the value is coming from the product. So the meme coin is completely out of blue about that. But if we're talking about, for example, infrastructure project that's related to the crypto topic, I think there is a lot of chance to succeed. And especially with the cross-border B2B payments, we will see a lot of potential of investors even this year to invest and participate in this company that's facilitating that.
Let's talk a bit about payment infrastructure. You were involved in launching Uber's payments infrastructure in Ukraine. That sounds big, but I want to understand the context first. How do you actually end up in that story? Were you working inside Uber, or did you come in as an external partner or consultant?
Yeah, it was a very interesting story. So we started with a problem. So it was an issue that was on the table of the Uber team, launch team for 3 years. So at progress without zero chance to successfully end up with a result. So we have some conversation beforehand, like, it was previously my relation with the Uber team. So they asked me about what exactly all the payments infrastructure layer in Ukraine. It was in 2016. And if you remember, there was a time when the first situation with annexion of the Crimea, with the war in East, and of course with all the layer of the financial banking system fucked up, especially with this corruption government situation. That was a context of the reality. And we have bright team from the Uber that decide to arrive in Ukraine and just choosing an idea that they want to facilitate all this financial transaction layer easily. So the reality was completely different, because the reality was that the financial system was running on the software layer of 90s. They have limitation from the compliance part regarding the cross-border. They have a lot of regulation in terms of licensing, these kind of scenarios. And no one was clear about how exactly need to be solved this reality. So I was exactly the person that started to build up these relations between financial institutions like banks, with the National Bank of Ukraine, and with the Uber launch team that was distributed in South Africa, in Amsterdam, in Warsaw, Poland, and all of that relation part that was like a case when I need to negotiate this reality that drivers should obtain their fees immediately, because again, like if you know the model, the Uber drivers sometimes need to have money exactly the same day. They don't need to wait for the next day because they probably don't have even money for the gas. So we changed a lot inside this system, and the main proportion was a part of compliance. So I was dealing also with the government, especially with the head of the Ukrainian National Bank. So we crafted completely clear scenario that Uber was as a model exclusion for existing legislation. And I remember this part clearly, that Uber team was written me the email that they completely crazy that they finally can launch their model, and they was like sort of like feeling that the part that only missed is can be done only like maybe with even the child, because like they just need to hire the drivers and everything already set. So that was nice endeavor. I still have tight relation with the team. They're already not in Uber, but it's like it was quite clear condition when I understood that the compliance part, the product layer part, and of course, with all these relations between third parties, that definitely something that always needs to be solved by one person that has authority or responsibility to do so. So I was the guy who decided to make it happen.
In simple words, you was like a connector between government and project.
So I utilized all my connections back then. I remember I've been chat with Dmitro Dubilet, with Mikhail Rogalsky, with all the team of the Privatbank as well, with the launch team of the Uber, and they exactly they come from different world perspective, but the value that I tried to elaborate for everyone was a bit different, because again, each party was completely think that they want to have this piece, and you need to solve this complexity with negotiation and transparency between these counterparties, so they will be feeling that they are working with the same direction. So we managed that, and I think that was a unique case, of course, that speed up a lot in terms of infrastructure for the payment, for the fintech innovations, because my belief that the Uber, it's not about the taxi or car sharing or something like that, or delivery. It's a pure fintech, because the beauty is inside the payment system of Uber. If you can learn more, you can understand how they're dealing with all the counterparties, how they're dealing with these fees, how they estimating them. All of that's completely a financial layer that was new reality for the market. And I still believe that Uber is more about the payments rather than about the taxi.
Honestly, was it truly difficult for you or more organizationally complex, but without major breakdowns?
It was complex because if you imagine like financial system in Ukraine, they were completely not ready for having the cross-border payments with counterparties, with payments in and out, with a single moment of transaction, and everything need to be facilitated, everything need to be tested, and then also, of course, we need to adopt and understand the compliance part of legislation, how we can exactly and where exactly we can build this in. That was my moment on truth, because that the feeling that you can change not just like the product layer, the technology or code, you can change the whole layer of industry in one country just for a reason, because like you understand that that's bring the value on top. And in my opinion, what we have further like launching other services related to the fintech with the crypto, that was exactly point where we are built in of this existing scenario of Uber and start to innovate with other product and models that right now also facilitate pretty well. We know that there is many examples, but again, like to compare, you need just always change your language. Like, sometimes I always mention this to my friends, because to deal with, for example, with national bank, you need to speak with one narrative, with one value format, and to change this perspective. But it's all about the same, and also deliver the same message to audience of Uber team. You just completely need to redesign narrative, and they also will understand why exactly these guys from the bank or from the national or regulator cannot do so, like, and you need to change the model. So we manage that. And I think that the beauty about this case also, that's biggest complexity about this case, that's the launch team of the Uber was not allowed or not have authorization to change any code line inside the product, because product was designed as a one piece, and there was like really crazy backlog of features that they need to deliver. So they don't want to change something for Ukraine. So we managed to build this infrastructure layer without even single change of code inside the app. So that was, I think, a very great example of how we can negotiate on different layers with different counterparty, the value that unite everyone to the one perspective that they need to do.
Usually, when a product is small, the payment system looks like simple. You plug inquiring and it works. But probably, as I understood, not in this case.
Exactly, because the payment infrastructure was designed in Netherlands. Like, they have all this transaction come from this country. Again, like, the drivers were in Ukraine. The customers was also in Ukraine. Somehow this payment should be going seamless. All this transaction value is completely crazy big size of the amount of cross-border that was not exist at all at the beginning. So we need to facilitate everything to the point that it was transparent, especially for the regulator, for the banks, that can be done this way. And yes, like, I remember even that the beginning was like sort of very dumb. Like, we tried to even use different cards of different banks and see if the transaction went well. So like the funny story that all the Ukrainian banks was stop the transaction, except only one bank. That was Privatbank. Somehow they like this kind of very small $1 transaction went pretty well. And that was aha moment that we can do exactly the way that it could be a case that we can easily scale for the not just one or two or three or five bank, for the whole country. So that was the reality.
What's the first thing that breaks when a business starts growing fast and tries to operate in multiple countries at once, from your opinion?
I think that we are on the side sometimes of the compliance part. And if we're talking also about the case with Uber as example, number 3 person inside the company is a chief legal officer. So like not the technical officer, not operation, but legal. And yes, like, the compliance part is matter. We are inside the iClub are always evaluating every angle on that topic. And to do so, like, you need to rely not just on your shoulders, on your like knowledge, but rather to find a partner that can help you out to speed up this process. So I think the whole phone book with different lawyers, with different firms that can consult me with legislation of each country that we were actively involved with iClub and with our investors. But again, like the matter is simple, like, that every changes with your launch, with new country, with a new geo, come with a price. So you need to understand where exactly or how far you can go, that you can easily manage this through the regulation that allow you to do so. And if we also mention the reality that we're facing right now with the market of payments and with the global scale, so you need to care about this first and then decide to change your market perspective, because like sometimes like the time that you need to invest to this topic is crucial. And I've seen these examples everywhere. Like Revolut, for example, they are like screwed it up like a lot on that topic. You know that there is a bunch of story about them. And if we are talking about the growth stage, it's always coming with a price, because again, it's not the easy reality that you need just switch on and then face the reality that you are where you're present somewhere or working with a new region. You always need to move like slowly, but again, surely that you are able to do or grow with that kind of direction.
At some point, a business suddenly realizes that the infrastructure can't keep up with growth anymore. At that stage, what becomes more critical, product itself or how everything works technically and financially behind the scenes?
Of course, infrastructure layer, it's definitely the most important and crucial part that allows to manage a lot of things inside the product. The product layer itself, like it's mostly like the consumer-faced reality. And if we're talking about like a reality that we need to go on scale, we need just to find out these like bottlenecks. Like we did the same like inside the iClub. So like, you know, first year when I was in iClub, I was every day ask myself the same question: where exactly I'm seeing the case that process doesn't move at all, like, or we have a limitation about some function. And then I deep dive in the same reality and understood that they probably one single person or one single kind of route or process driven by someone that's completely a blocker for that. So we it's always coming with a negotiation. So like it's coming with the idea that you need to change everything properly to the point that you are ready to face the reality of scalability. With our example, we basically invest 24 months inside our product layer. We are right now ready to scale because like last year we invest $20 million US, and this year we are planning to co-invest 50 million. So if we're talking about this kind of scalability, it's not easy because, like, you know, if you have a shitty product, you basically we will not be able to facilitate that. But if we're talking about like the situation that we have right now, like, you know, I can easily have 100x scalability from the user perspective inside the app of the iClub right now and have zero pressure for the infrastructure. And that's the beauty because, like, you know, again, it's come with the price. You need to pay your time, your resource, your expertise, but then you're basically unstoppable to scale up.
Global markets. I know you have worked with very different markets, the United States, Europe, Ukraine. Looking at fintech today, which markets seem the most promising?
If we're discussing the market, of course, I see a lot of growth in Southeast Asia. That's a market of high attention right now, especially with all the startups and innovation. Of course, we have markets like TAM, Africa. They're also interesting to have and promising a lot of potential of growing, especially with some specific sectors. But from the focus perspective, I'd rather explore the idea, the capacity of the market, like, you know, how far it can go. For example, if you launch something like in specific geographic, is it scale that you can achieve? Are you satisfied with that or not? Like, or you want to shift your attention maybe somewhere else because the scalability is the matter. So yeah, like right now, I think that not the best time to fight for the US market. Maybe like it will be changed in some way. But if you want to play with the US market, probably requirements will be just to go there and live your life on local ground to just figure out the way how the things are operating. Because there is a lot of in the US questions that related to the compliance. And if we're talking about consumer, they really like to sue companies. So like the different layer of the consumer. So like they want to run this the cases where they can find how exactly they can treat your business. in a way that they can legislatively go in a court. So that's a perspective that everyone not ready to deal with. And if we're talking about also liability insurance, that's something that you need be like ready to buy a set from the day one if you want to operate in the US market.
From your experience, where is the easiest region, country to start, and where is the easiest region to scale?
Partially already answered, but to concrete emerging markets, they're pretty amazing in terms of how exactly you can iterate. And some region that has, of course, capacity for scalability, because you don't want to face a reality that your market is limited, because again, that's a cap scenario for you to understand that you're not able to grow in a way such fast that you are expecting to. And if we're also comparing different models of launching the same idea in different regions, it's better sometimes to put your bet on the region that you can basically achieve the required amount of market share, and then switch the focus for the region that you can potentially see the reality of limitation or scalability mix of emergent/limitation. So that's the point that you need to understand as a whole of the beginning.
How painful is it for startups, for example, to choose the wrong market at the beginning?
It's extremely, because with my point that I mentioned that you just spending your time, and that's the most precious asset that you have. So my opinion, you just need to understand that you don't want to spend your time with the same route that you face a reality of limitation. You basically need to focus on those directions that can potentially bring you the biggest ROI of your time effort. So if you want to just invest, you basically invest your time in any launch of the product or exercise. So in this reality, you need to judge yourself at the beginning completely in a way that, yes, that's a bet I want to take in, and that's a bet I want to just start to invest my resource, and I will not have any regrets about that. So that should be already done on the beginning.
As I said previous, startup with corporations. People in startups often say corporations are slow and full of bureaucracy. You have seen both sides. What do startup founders usually misunderstand about how decisions are actually made inside corporations?
There is completely out of blue reality for those who not understand that while you're trying to deal with person that has a problem, he's most of the time not the decision maker for the solution. So that's your completely crazy understanding that you not need to always overpromise for those who are easily can say yes, because they are not the decision makers. And even the CEO cannot be a decision maker for some specific topic that you want to be relate to or asked to have approach about. So there is some complexity inside from the architecture perspective. But if we're talking about how you can win, not just limit yourself, it's better to find someone that can guide you through whole the process and explain first exactly how you need to iterate with a corporation if you are startup founders, for example, B2B. So then you can easily save a lot of time with dumb meetings, calls or emails that's completely not get you to the perspective when the deal will be over and sign the contract. So I've seen these examples a lot. For example, from my practice experience, I know the founder that was building automation in agriculture that you can easily create with a farm combine. So that's exactly where you can just plug in the tool that can easily create from your combine automotive vehicle like Tesla self-driving, and that can go to the field and completely automated do everything. So they tried it out with the marketing team, with the CEO of the companies, with the engineering plant managers, etc. And they completely stressed out. So the answer was there, because you need to understand perspective, who exactly struggling most of them. And that was the marketing, because again, if we were talking about this specific industry, to sell this combined for several decades without zero innovation, it is a pain in the ass for the marketing team. So they decide to completely refocus from their perspective of who exactly they need to trigger to the point that that's exactly their marketing team, not just CEO or engineering manager that completely don't care about this problem because, again, at the end of the day, it is their problem, but they are not such sort of stressed out about these things, how need to be innovative in a way that it's expected from the market.
And the other way around, what do corporations most often misunderstand about how startups really live and work?
Corporation, they try to always play the compliance part game with the startups, and they always miss one crucial point. Most of the startups don't have a time at all because like every second they are lose their money. And most of the time these startups don't have proper funding. Most of the time these startups don't have a lot of time to think about. So they just need to act fast. And yes, of course, that's the reality why some corporate VCs or corporate venture capital funds, they are like screwed up with burning the company that when they come to production line, they completely doesn't bring any value. And in my opinion, sometimes these corporate VCs and corporate investors, they are creating their whole layer of companies that no one want to deal with because they are not just coming with the value perspective, but rather coming from the perspective of compliance part.
Explain please how investors really make decisions. Let's make this very practical. When an investor looks at a startup for the first time, what matters most at the moment?
It's not one thing. Can explain you easily, so you can use it in purpose, like our audience, if they will somewhere or somehow decide to investigate this topic. So first of all, you need to understand whether or not this team is appropriate for the challenge that they take in. So do they have a proper experience beforehand? If they are like overachievers or just like regular folks. Second thing, you just need to understand whether or not they can iterate really fast. They're just not just they are talking and promise you something. That we've seen a lot in crypto, that there is plenty of folk that just overpromise something, but for zero chance to deliver. And yes, of course, you need to also understand properly the market perspective, like where exactly this kind of market will come in from. And it should be not just a market size. It should be specific insight from the product or from the CEO that you need to understand better to facilitate that's a topic that can change the industry. And of course, you need to also to cooperate actively with all your co-investors. And in our case, in iClub, we have always great deal that has not just us, but also VC funds from US, from the Europe, angel investors that you can easily chat about topic that you want to facilitate. And the last thing, of course, it's important to just trace the idea that whether this is real thing or just imagination of founder. And that's question that put everything to the ground because what we are just chatting about, it's all about something that you can easily design or create. But if you're just trying to put yourself in a customer's shoes and understand whether or not this thing will be something crucial or just another similar topic that everyone already uses, that's create a completely different footprint from the perspective and aha moment that you understand, okay, that's the reality. I'm clearly and surely want to be involved with this investment.
What looks great on a pitch decks today, but almost never works in real life?
Yeah, it's plenty of the topic that we can explore from the metaverse, some NFT projects, maybe even a project that related to the AI that doesn't have any real value behind, just AI on top of everything. And so we can easily arbitrate these terms, but in my opinion, the difference sometimes coming from the most of the time, of course, from the founder perspective, because even with a bad idea, that's from the first angle, you see they feel that it's not something appropriate for the market condition or not something appropriate for existing situation. But then if you chat with the founder and just explore this topic more broadly and understand better the insight, why it's matter, then you try to better knowledge about what exactly you are faced as a challenge. And all of that, it's really important. But in my opinion, maybe in a decade or 2 decades, we'll see these NFT projects that will definitely a top layer result or idea that will bring the value. And we'll see how this like change the paradigm, or maybe even like with project that related to the AI or other topic that I mentioned, like, but the timing is also very important to understand that, like, the market is here and ready to facilitate it from the value perspective. It's not just a play.
What makes an investor say yes? Maybe is there kind of, I don't know, magic sentence that makes you think, okay, deal, I'm in?
I always mention this to a lot of folks, but they're not catching up this idea. But the idea is simple. If the investors not invest their time to your project, most of the time, like 100% time, they will never end up with investing their own money. Because from the perspective, what I seen right now, you mentioned that, these people that like spend 10, 20 years earning their wealth, and now they are seeing you as a founder and need to decide whether or not they want to put their own money that they just earned like for these 20 years. In the day, like I have this lot of stressed out cases to just earn this money, whether or not they want to start at least invest like 5, 10, 20 minutes to this conversation. And yes, of course, what I seen, and as the opposite, when I see the investors topic that's easily resonate with them, like, they start to be active in terms of questions, active in terms of how exactly they want to chat with the founder, how much time, of course, they want to invest in this exercise. That's like 100% like signal that they will invest money to this particular company. So yeah, the answer is like the money and the time is similar in terms of value, but the time even better.
Yuri, let's look ahead. How do you see fintech in 5 years? What role will crypto play in that system?
The crypto will be crucial part of the reality in 2031. Yeah, so we'll have, I think that's completely transparency about the cross-border payments. We will see the reality of the large CBDC project that's been already established on the markets and how they are driven on the not just bank layer, but on the consumer side as well. And all of that will help us a lot because it will speed up everything. You mentioned, like, for example, if the transaction between the companies will be done in crypto, that's completely different angle. So you will not have this issue with debt from the payments. You don't have this issue with third-party correspondent bank that just want to push back your payment without explanation why. So all of that will be solved. So that will speed up the process, infrastructure, and all of that bring us to the point that we'll be more efficient in terms of how exactly we are acting with our not just these corporates or startups, but also with our own finance. My point that probably the AI as well will bring a lot innovations in terms of how exactly we are taking the decisions, how exactly we are speeding up ourselves in terms of how we're using the money. So all of that is matter. But the crazy idea is simple, if we're talking about the stable coins or blockchain, the reality that's probably next 3-4 generation will have information how exactly we were spending our money in 2031, because that will be transparent and everything will be listed in all these bricks and smart contracts inside the blockchain. So that's create the whole legacy reality that we will probably understand even further, not just with our own life, maybe several generations upcoming. And that's the moment of truth, of course, because you're not able to hide something. You're not able to bullshit about topic that you're not involved at all, because everything will be transparent. And in my opinion, what we also already trace and track, that the point that, of course, we've seen with stable coins, they are already have significant presence in the global market. For example, stable coins already have almost 300 billion transaction of planning for this year. And they also, right now, in blockchain, 94% of all the transactions they done in stable coins. So in my opinion, that the use case is there. The only question is who exactly and how exactly we can scale this use case with a product or infrastructure layer, for the point that user can easily solve a lot of issue with the timing and with complexity to the point that it's completely transparent and fast.
Who, in your opinion, is unlikely to survive this game?
Those who not believe in the crypto, because in my opinion, the crypto is a topic that needs to be facilitated properly. Fintech did it for the last decade. They tried to do it everything, but right now the value of the stable coins in terms of infrastructure layer is crucial. And so what else need to understand that companies like Swift, SEPA solutions, all these payments solution, they will be struggling a lot with the understanding that they are already not relevant in the perspective of the existing market.
What's one piece of advice you would give to fintech or crypto founders today, something they might not want to hear, but that could truly define their success?
I think that you need to be transparent inside your team, inside your customer base, because that's every customer with the loyal relations with the company, with the product, with these fintech founders can bring the value, because sometimes we're not such great in terms of building long-term relations, but in terms of reality where everyone can easily replicate the code with AI, you just need to build this kind of relation that customers will stay with you and not just switch from you because some AI decide to launch new product in the layer that you're not expecting to. So every relations is matter, like with your team, with your peers, with your company, like customers, and that's shift your idea that you're not on the side of delivering something as a like good. You're on a side of building long-term trusted relations first, and then you're pushing this idea of value of these relations and value of your product. I'm trying to do the same with all my peers inside the team, with all my customers. I'm trying to be transparent as much as possible. I don't have this A, B, C, or D answer. I always have the same answer for everyone. And that sometimes save a lot of time for me, to not just live in these different realities. I have the same reality for everyone. And if the truth is complex to understand, even as a feedback from the customer or feedback from my peers or my employee. So I still treat this as a value for me to just change a bit my perspective and then evolve this relation to the next point. So all of that is matter, because again, you see the reality of social media, even though our podcast that we're doing right now, I think that's amazing. But in a point of reality, every relations, every communication layer that we build will pay off and pay back for the future, from the perspective of 5-10 years, definitely.
Yuri, thank you for your very honest, deep, and practical conversation. It was really interesting for me, especially, hope for you and for our viewers too.
Yes.
Especially the part where we discussed how investors actually make their decision, and then you see those huge numbers in the news, like certain funds putting so much money into a particular project. Thank you for your coming.
It will be always pleasure to rejoin or have another conversation. But again, we have limitation today, so let's move forward and let's try to build trust relations. That's simple.
Friends, this was a Trustee Talks, a podcast about finances, businesses without illusions. So make sure that you are subscribed, hit the like button. I will see you very, very soon. Take care and take care of your finances.